Alright, welcome to this new video. In this video we're going to talk about how to play the 10 AM game. And during the live streams from the last couple months, you've seen the 10 AM game playing out so many times. And let's go over them from this week. So we had two beautiful ones. And let's start with this one. So when you have the New York Open at 9:30, look at the time, 9:30 here. You should look at where is the easiest draw on liquidity. And the easiest draw on liquidity are pairs. It's price action what is paired with the staircase effect, failure swings. And it's even better if your bias is bullish because you see all these failure swings, that we draw into a higher time frame liquidity pool. Let's say a daily BISI. So here on Tuesday, that was the play to look at before the market opens. So let's play this out and let's see where you could have entered based on the 10 AM game. If you don't know what the 10 AM game is, just look at the 2024 mentorship. There's a whole breakdown on what it is. And it's a entry model on the 1 minute on NASDAQ, what happens almost every single day, where you can get easy wins. So what you look for, daily value gap. You want aggressive sells, aggressive buys. The smart money reversal from a market maker buy model. And then what you want to see is, if you suspect we might go higher, you want to see discount arrays. That means bullish value gaps, bullish breakers, bullish order blocks. You want them to be respected. So we tapped here, and then we displaced higher, creating this 1 minute value gap. Well, let's see if it holds. And looks like it does. So that's amazing. And now you have this bullish breaker and the bullish order block combined here together with a fair value gap. What is that? That's a unicorn setup on a 1 minute. Let's see if price comes back there. It does. So here's the unicorn setup. So this could be your first entry. Remember, the 10 AM game, we don't play the first fair value gap. We play always the second. And how cool is that the second fair value gap is paired with a unicorn setup? What's the target here? These highs. So that would mean first entry possibility like this. If you do 1 to 2, it's right here. If you want to 1 to 3, it's right here. So entry possibility 1. Comes back here a few times, and then we displace again, leaving another value gap. It's going to be your second possibility. And if you notice you are on the buy side of the curve of a market maker model, then you should want that down close candle support price higher. So here, second entry. Right here. Same draw on liquidity. 1 to 2. It's right here. If you want to 1 to 3, you can put it like here. Look at the time. It's after 10 AM, so we're playing the 10 AM game. Price comes back here, consolidates, and then it goes to TP on both setups. So it doesn't matter if you missed the first value gap. There was a second entry possibility as well. And then draw on liquidity. Remember, you want to target low resistance liquidity, and you want high resistance liquidity to back up your setup. So here's high resistance liquidity. We took liquidity here into a higher time frame array, and then we pushed higher. That's exactly what you want. This was the first one. This was on Tuesday. Then let's go to Thursday. And look at the time. It's 10 AM. So here we open at 10 AM. And if you want to long, then it's nice. Let me remove this. If you want to long, it's nice that the price goes lower first. And again, you want to see that exact same signature. Aggressive sells, aggressive buys. And then you are going to verify for yourself, are these value gaps holding? For value gap 1, for value gap 2, and you should be good. So here, let's see, we took some liquidity here. Right here. And then we create our first fair value gap. Again, if one fair value gap is not enough to say to yourself, we are at the good side of the curve, you want a second fair value gap. And it's forming right here. So this could be your setup. Fair value gap 1, fair value gap 2. TP at the high, 1 to 2 here, 1 to 3 right here. And then here, there's another fair value gap. If you want to play a really small range, you can even try your luck here as well. You're targeting 40 pips, which means only like 10-ish points stop. It's more dangerous setup. I would definitely recommend putting your stop loss below the fair value gap or below the swing low. But let's say for this one, you were targeting a 1 to 2 instead of a 1 to 3 because you're already quite high up on the range. Comes back, very scary. You have a small stop loss, so that means big drawdown. And then it goes to TP. So again, a 10 AM game played right here. I hope you enjoyed. I noticed that only 20% of people watching the video actually subscribe to the channel. So it would be amazing if you could subscribe right now. If you like this kind of videos, share with all your trading friends. And with that said, I'll see you in the next one.